Hey all, welcome to Share Trek. This is Raj here. Guys, we are heading towards the weekend and we're going to have options expiry. And next week is going to be the Fed's interest rate decision. Out here in Canada, the interest rate has been increased by 25 basis points. And before that, Australia also increased its interest rates. So these were two unexpected interest rate hikes. Especially in Canada, I was not expecting a 25 basis point hike because the interest rate is also feeding into the inflation in form of rents and mortgages. So we'll see what happens. But the main thing for the NASDAQ is next week when the Fed is going to come and talk about interest rates. To discuss this and also to look at the various stocks, do a bit of technical analysis, I have found a few patterns here and there. So I want to share that with you. That's what I'm going to do in this video today. So let's get started. Welcome back, friends. US stocks closed higher on Thursday, regaining some of their momentum thanks to a rebound by technology stocks, while volatility dropped to record lows ahead of an eventful economic and policy calendar next week. Let's take a quick look at the economic calendar for the next week. Well, friends, here is the Trading Economics website with the economic calendar for US. Actually, this website gives you economic calendar for the world, all the major economies, but I have filtered it just for the US so that we can have a look at what's happening next week. So Monday, June 12th, gives us the consumer inflation expectations. So that's the one bit of news that we can look forward to see. And then on Tuesday, we have the inflation rate month over month and core inflation rate year over year and inflation rate year over year for US. And the previous numbers are given here. Month over month, it was 0.04 previously. Core inflation was 5.5% previously. And inflation rate was 4.9% previously. Whereas you can also look at the forecast. We are expecting inflation rate month over month to be at 0.3%. So if it goes above that, then that means the Fed will have to be more hawkish. And if it goes below this, then that gives Fed a little bit of room. And then we are looking at core inflation rate year over year going down to 5.4%. And inflation year over year going down to 4.7% from 4.9. So that's the general expectations. So anything apart from this expectation is going to change the trajectory of the market. Right now, I believe we are in the wait and watch mode. And then going further, on Wednesday, we have the PPI Producers Price Index month over month expected to come in at 0.01%. And the consensus estimate is 0.02%. And the previous reading was 0.02%. So that's other data point. Core PPI MOM is also there. And then we have Fed interest rate decision coming on Wednesday, June the 14th. This is going to happen at around 2 p.m. The previous interest rate was 5.25. They actually predict a range in which they will be. So it's expected the range is going to remain unchanged. In other words, Fed will not do anything now, but probably in July they might increase by 25 basis points. That's what 50% of the analysts believe. And FOMC economic projections will also be released at around 2 p.m. And if we go further, we have a Fed press conference at 2:30 p.m. So that's another important data point for next week. And on Thursday, we get the retail sales month over month. The forecast is 0.05% and the previous reading was 0.4%. So the forecast is 0.5%, an increase of 0.1% out there. Let us see how that plays out. And if we go further on Friday, we got the Michigan consumer sentiment preliminary estimates. Previously, it was at 59.2 and the forecast is 60.8. So those are what we are expecting for next week. But the main mover is going to the Fed interest rate and FOMC economic projections. These two are going to be important, followed by the Fed press conference at 2:30. So that's what the market is primed for. So right now, I think until Friday, there is no reason for the market to go up or down because there is no major news. All the focus is on the interest rates decision. The options expiries might have a little bit of impact on the market on Friday. That's my expectation. So we just now had a quick look at the economic calendar to see what is in store for next week. Traders have priced in a 73% chance of the US central bank holding interest rates at the current 5% to 5.25% range during its monetary policy meeting on June 13th to 14th. According to CME Group's FedWatch tool, this is the information we have. However, they see a 50% chance of a rate hike in July. The 2-year Treasury yield, which tends to move in step with short-term rate expectations, slipped from 1 week high to 4.51% after a sharp jump in the weekly jobless claims signaled softening labor market. U.S. weekly initial unemployment claims rose 28,000 to a 19-month high of 261,000, showing a weaker labor market than the expected unemployment of 235,000. So that is kind of pushing the Fed into a defensive because it kind of sees a move towards a recession. Meanwhile, the US Labor Department is due to release inflation data on June 13th, as we saw in the economic calendar, the first day of the Fed meeting. The numbers are expected to show consumer prices cooled slightly in May, but core prices remain sticky. So if it doesn't come according to expectation, then the markets may move in a different direction. We also witnessed a rebound by technology and mega cap stocks, helped by major indices regain their footing amid thin volumes. The technology sector has staged a strong comeback this year, and it's once again dominating the stock market rally. The hype surrounding artificial intelligence, easing inflation, upbeat corporate earnings, and investor flight to mega cap tech stocks have been driving the sector high. Based on data from Bank of America Global Investment Strategy, US tech stocks are enjoying their greatest outperformance relative to S&P 500 in 97 years. This has resulted in a huge rally for leveraged ETFs, with funds targeting FANG stocks and single stocks more than doubling this year. These funds seek to register big gains in a short span. This is where I have a solid gain with FNGU, the 3x leveraged FANG fund. Amazon has formed a bullish harami. I'm going to show that to you in the TradingView platform. Let's go to the TradingView platform. Here we are in the TradingView platform. As you can see, FNGU, which is the XXX FANG index, three times leverage ETN, that has gained 5.81% again today after a drop yesterday. So it's reclaimed half of the drop that happened yesterday, and it's looking pretty good at this point of time. The RSI had been overheated, that's why it fell down, and it's now again at the overheating point. So let us see what happens tomorrow. Google lost a little bit, but Amazon has been on a tear. It has formed what is called as a bullish harami according to Japanese candlestick pattern, and it has 2 levels of support out here. I'm just going to draw the supports out in green so that we can recognize them as supports. So we have bounced up from this line of support. I'm just going to make it a bit thicker so you can see it in your smaller devices. So this is where we have bounced off, and also we have formed a perfect bullish harami. So I'm expecting this to go up tomorrow. There's a bit of room left for the RSI before it gets overheated, so we could probably see more upside on Amazon tomorrow. Netflix has also done pretty well. It has erased most of the loss that it had yesterday. It's also on a bullish track. And if you look at IBM, the cup and handle pattern is still intact. We opened much higher, we came down, and we ended above yesterday's closing. So that's a positive in my books. And also this is because we are overheated on the RSI. There'll be a bit of cooling off, and then we'll proceed further high. The upward progress is never in a straight line. There's always a little bit of up and down here and there, but in the process what we have done is we have got 2 more bullish supports in place, 1 more bullish support in place. Just going to increase the thickness so that you can see it in the smaller devices. Microsoft has also recovered a little bit of the losses that it had, and if we were to look at Meta is also on a positive note today. And we have Apple, which has also gained significantly today, and Apple is on a really healthy bullish track, so that's also looking very good. Now let us go and have a look at our genomics side. In genomics, first I'm looking at IMTX, and IMTX has done very well today. It has gained 6.94%. I'm really happy I have this in my portfolio. Schrodinger is continuing to try to break out of this bullish pennant, and it's already broken out for the second time. We'll have to see whether it can hold on for tomorrow, and I suspect it will, because our focus is on the interest rate decision for later on, and we still have room for the RSI before it gets overheated. So I'm optimistic that we're going to convert this permanently into a line of support. So I'm changing that into green line to indicate that it's a bullish support line out here. Now next we'll go on to Bluebird, which seems to be forming cup and handle pattern. We need a few more days of readings in order to be absolutely sure. I would have wished for a little more momentum, but momentum is not below average, it's just at average. So the next, on Friday, we have a very good opportunity to move up a little and then come down and then go back up again to form the handle. So let's hope for the best. Invitae is also done well. It's gained a little bit more. SQZ Biotech is struggling still. Illumina has done slightly better today, and it's still on the bull channel out here, so I'm very happy about that. Now this bull channel is going to go further and form a pennant or a wedge out here, and we'll have to break out on the upper side because we are on a ascending pattern out here. So this pennant has to break out on the upside, and this will be our next resistance, this diagonal line of resistance. And if we were to look at Intelia, it's not doing great. It's come back under the resistance line out here. It's going to be range bound, I believe. And if you look at CRISPR Therapeutics, it's starting to get progressively weaker, but it's got a lot of support. It's got first level of support out here. I'm going to make it a bit thicker so you can see. And the first support is at 61.66. Then we have supported this diagonal line of support, then another horizontal support line, yet another horizontal support line, and a diagonal line of support. So there is a lot of bullish support out here for CRISPR. I'm not too worried. Momentum is also above average, so it looks good. PSCB is doing well. Verve is gained a little bit today. It's a doji candle, a lot of indecision. There needs to be some good news for Verve in order to move up. Otherwise, I think we are waiting for the interest rate decision, and we'll see what the whole market does. Verve will mirror that. Allogene didn't do very well today. It has dropped a bit. And then if you look at DNA, it's managed to stay above 1.70. So I'm happy about that. Earlier, I was happy that it stayed about above 1.60. Right now, I'm happy that it has stayed above 1.70. I'm hoping that it's going to bounce off from this diagonal line of support at 1.75, and again try to challenge the resistance at 1.82, because there is plenty of room for the RSI to move up, and momentum is above average. MACD is also bullish, so I'm looking for the best out there. Sarepta, I don't want to talk about it because it's very erratic at this point of time. Beam has begun a cup and handle pattern, so we need a couple of days of gains in order for the handle to form. Handle is partly formed, but we want it to move upward again. So I'm hoping that it happens on Friday, but unfortunately for us, the momentum has dropped. If the momentum picks up, it'll be good. I'm still hopeful because momentum is still at average and it's not below average. So I'm hopeful that Beam is going to create a successful cup and handle pattern, and I would have a target out here. Let me do the targets very quickly. So I would take this to be the bottom and this to be the neckline out here, and I can clone this and pull it upwards. So I think the target is 36.74. If it's a successful cup and handle pattern, we'll visit this on a daily basis to have a look at it. And then we go to Fate, which has not done very well today. It's dropped 3.11%. Bionano Genomics has also dropped 3.41%. Caribou has dropped a big whooping 6.49%. Editas has dropped 8.75%. Let us see if there is any bad news out here. No bad news that I can see here. And I'm going to convert this line of support at 9.65 into a line of resistance. We have to break through that. And Prime, after making a lot of gains, has lost all the things in one day. It has lost 10.60%. Is there any bad news out here? No bad news. It's just market volatility out here, but momentum is still above average, so I'm hopeful out here. That brings me to an end of this analysis session. today, and we are seeing a lot of cup and handle patterns coming up, especially the one that is forming for Bluebird seems to have some fundamentals behind it, because we are approaching the approval of lower sell. So maybe it's the precursor for a rally to take place as we approach the year end in anticipation of lower sell approval by FDA for Bluebird. The momentum, however, needs to pick up for Bluebird, so I'm hopeful that that will happen. And as we saw, Illumina has managed to stay in on a bull channel and can do with a little more improvement on its momentum. I'm hopeful of that as well. And we saw how CRISPR is becoming a bit weaker, and we saw DNA doing well. So overall, I think there is more positives than negatives in hand for us. And now every positive thing depends on what happens with the Fed next week. So here is wishing for the very best to everyone out here. Let's hope for the best for the next week. So guys, I also wish you have a very good weekend. And with that, I would like to say bye. I'll catch up with you on the next video. Bye for now.